Today is a Friday, August 10, 2018. Let me remind you that trading is risky, not appropriate for everyone. Your past performance, good or bad, is not necessarily indicative of future results, but please stay small, stay humble, focus on the long term, and never risk money you cannot afford to lose. Hello, my name is McDonell. I am the Chief FX Market Strategist for TradersWay.com. If you are enjoying or benefiting from these daily webinars that I host every single day, then please visit TradersWay.com and open an account today and become a member of the TradersWay family. An ECN, a fixed spread or variable spread account. It's your way at TradersWay with TraderWay. Trademark associated with it. So you should have some pretty colors. So we were talking about risk-off moves related to market happenings over the last 24 hours. There's concerns about European bank exposure to Turkey, and Turkey is falling apart as a country, and sanctions are being imposed. The government is, I suppose, it's not even opinion anymore, or ever was, but now is acting quite irresponsible. But it reminded me of a conversation we had. What year is it now? 2018. When was the crisis? 2008. So maybe 2009 or 2010. We had a conversation in regards to my concern about the quantitative easing. So if you go back, let's say just 20 years. 20 years ago, a central bank, in particular in advanced developed economies, they would have told you that the idea of quantitative easing was horrific. For a government to buy its own bonds would be a horrific, unthinkable move. And quite possibly at that time, impossible. Monetizing your own debt, possible, never will happen in a million years scenario. And of course, now every major advanced economy is doing it, and they're like, oh yeah, it's sort of a Keynesian approach of just buy it and create the demand, right? Okay, cool. But around 2010, I said my concern about that is developing nations are going to say, oh, wait, you've been telling us for the last 100 years that that was not on the table as an option, because there'd be horrific outcomes to a government buying its own debt or doing something unthinkably, some unthinkable monetary policy, right? And my concern was these developing nations would see this and say, well, if it's good enough for the United States and England and Europe, then it's good enough for us. But here's the other thing. When someone copies you, especially someone desperate, they're going to copy it 10 times better. Right? 10 times more extreme. Sort of like the idea in Dubai. I don't know if you've ever been to Dubai before. They say if one will do 10. You're going to build a hotel. If 500 rooms is good, make 5,000 rooms. Whatever, just build it. Build it 10 times bigger, 10 times more fabulous, 10 times more luxurious, and you'll be that, and that's just it, right? So like you get a country now, I'm not sure if I mentioned Turkey as one of it fits right into that thing where, yeah, it doesn't matter if you have 45% inflation, don't raise interest rates. Well, there's a consequence to that. And I don't know. And we might be at that point of no return where things are going to get really ugly. And of course, what it ends up doing is, you know, this idea of Turkey being part of the European Union, Turkey being part of NATO, all that kind of stuff, that can crumble perhaps if it's seen as a country, right? Especially as we grow into a culturally insensitive world, right? Where we start to draw lines in the sand based on cultures and religion. So anyways, kind of a silly world. So let's do some technical analysis. So pound did fall. All it did. And what is the projected low for the month of August? That price right there. That's the aggressive low. And I have to zoom in 37. Okay. Can you guys see that all right? Yes, you can. So now what? I don't know. So I have all of this drawn going back quite some time. The next level, so we're at this orange line right now. The next level is way down here. So you have to decide, did we actually hit the low of August? And is it now up? It's going to fall the rest of August. I have nothing to go on. You know as much as me. I suppose the most important thing is you make a decision and then look for setups. If you thought it was going to go up, drop into a 1 hour chart or a 15-minute chart and look for signs of it going up. It's going to fall. You should probably let it break, let it pull back, sell. Let it break, let it pull back, sell. Let it break, pull back, sell. So on and so forth. But I marked this, and I don't know how long ago, 2 months, 3 months ago, marked this. I think on a macro level, we said we'd either buy it at this gray area or this, or this gray area, I think is what we said, if you were doing big trades. Okay. But again, this orange line, according to pivot point theory, should be the aggressive low for the month, and we have hit it to the pip. So even if this breaks and falls another 1,000 pips, who cares? Would you say that at least 1, 2, 3, 4, for 5 hours, would you say that this, the pivot? And if the answer to that is yes, it proves, I believe, that traders see this number, 127.38. There's nothing special about this number, except that it's a monthly S2. And if they see it, then they have monthly pivots on their charts. and probably indicates, right? Probably indicates they have it on their chart and include it in their analysis. So at some point, if that's the case, maybe you need it on your and use it in your analysis too. Right? Here's Aussie yen. We spent a lot of time on this a few days ago. We had a trade plan as a bull. Okay. As a bull, we said, look, if you're aggressive and you believe volatility is going to return and the market is bullish based on global macroeconomics, and therefore you think this is going to head up and in the next 2 or 3 weeks break out to the upside, then you could enter here. If you got a setup on a small time frame, which you probably did if you look here, because it did go up for 4 or 5 days. But it's an aggressive entry. But you can be aggressive. You just have to have it. And if you had the good reasons for it, then great. You had the monthly pivot here, and you had the weekly pivot here, remember? And with all that other stuff, macro-wise, it's a decent hypothesis. And then you use scientific methodology to confirm or deny the hypotheses. Okay? And it failed. Well, it's very possible, since it was up for 3 or 4 days, you would have either made money or broke even. Notice that this is exactly where the bears should have sold on a weekly basis. Okay, so that's very interesting if you're a bear. If you're a bear, you should have made money on this trade. And then lastly, our plan B, if this one failed as a bull, was to set it up here in this gray area and try again. If you bought it here and it did go up, you can see I drew this upward line. If you did buy it down there, this is your target. Okay, that's S1 to R1 on a monthly basis. Cool. And so you just, and we're just now at the bottom of the range. So, okay, so using technical analysis now says if you bought it down here, it should only go there, right? And then you'd probably get a move like this in September. The US dollar tends to weaken during times of positive macroeconomics. So let me give you an example. Is the dollar strong today? Let's say over the last 24 hours? Or is the US dollar weak today? Okay, strong. Over the last 24 hours, did we have positive news for global macroeconomics? Did things get better? The world is excited about all the good opportunities and all the good news. Is that what's happened? Or has the news been bad? Well, we have geopolitical risk, we have trade war, all this kind of stuff that didn't exist ago when I created my bias. He says it's been average. Actually, that's terribly, terribly wrong, Guy. It's been horrible over the last 24 hours. Yeah. We doubled sanctions on Turkey yesterday. And again in the last hour or so. Plus trade wars and stuff. But it scares the bejesus out of economies. In particular, in the European session, there were grave concerns about European banks being exposed to Turkey. So now it's become a European banking problem, not just a Turkish lira problem. Okay? Exposed how? Loans denominated in euros? Yeah. Yeah. So, which banks like BBVA and what's the other one that does a lot of investment there? I don't know. Anyways, yeah. So over the last 24 hours, there's been significant news that's been significantly risk off. Okay. So the dollar's strong. What if it was the other way around? What if things were looking good? Inflation was picking up in Europe. Factory orders were picking up in China and Japan. Countries like Australia, Canada, New Zealand were benefiting from increasing exports. It'd be the opposite would be happening. So like take a look at this. So let's just agree over the last 24 hours, the news has been bad for macroeconomics. So what happened? Now, first of all, I'm isolating dollar here. Dollar killed the euro. Dollar killed the Kiwi. Dollar killed the Aussie. Right? Dollar killed the Canadian dollar. And what happened to US dollar, Japanese yen? Because now Ted's only partially right here. Nothing. So what does that mean? Japan is a safe haven. Well, not necessarily. Japan I wouldn't call a safe haven, but the Japanese yen is a funding currency. So in a risk-off scenario, people are not taking new risky investments. In fact, any money they had set aside for risky investments and leveraged with yen, they're like, you know what? Give me my money back. So they're deleveraging, which means they pay back their Japanese yen loans, which means Japanese yen gets stronger because the money they borrowed has been paid back. Supply has fallen in the global market because people return their yen back to Japan. So in the international global interbanking system, there's less yen available, right? Or not just less yen in the marketplace. So less yen, stronger yen. Okay. So now you could say, well, let's look at the yen pairs because we know all the dollar pairs show dollar strength with the exception of this one. So let's confirm pound yen down, CAD yen down, Kiwi yen down, Aussie yen down, and Swissy yen sideways. What? So now we know dollar was strong and yen was strong. Well, what about Swissy? Swissy yen's about the same, so let's take a look at this. Look at that big move again. Okay, Swissy killed euro, Swissy killed Aussie, Swissy killed Kiwi, Swissy killed pound. So now we know three things. Dollar was strong, yen was strong, Swissy was strong. Well, Switzerland is a safe haven. When times are bad and they're cashing out of risky investments, now they have cash. What are they doing with their cash? They're stuffing it into their Swiss bank accounts. So I like to give you guys an example called an anchor that can be placed in your brain so you can think of this. So imagine a wealthy Middle Eastern sheikh who had risky investments throughout Europe, and now he sees this exposure to Turkey, and he believes this is going to be bad, so he cashes out of all these investments, right? Sells a couple of flats in London and Paris, and has a bajillion euro and pound, stuffs all that money into 100 leather Louis Vuitton suitcases, gets in this private jet, flies to Zurich, and the Swiss bankers meet him at the airport with armored guards, Mercedes G-Wagon, G63 AMGs, and they just load the AMGs full of these Louis Vuitton suitcases full of euro and pound, and off they go. And they stuff all that money into a Swiss bank account. Less euro in the open market, less pound in the open market. Actually, the other way around. Well, actually, it's the other way around because it's cash now, so it's cash and whatever. It falls. I'm having an off day, so I don't know if I just lost that whole big analogy. But all that money is being stuffed into Swiss banks. Oh, I know what I forgot. It has to be converted. Sorry. So to pound, you convert the euro. Supply goes up for euro and pound because now they're available in the interbanking system. And it was converted into Swiss francs, and all the Swiss francs now are stuffed into vaults. Okay. So let's get back to Guy's question. Guy says, hey, why am I bearish on US dollar, especially when they're raising interest rate? Well, I understand this raising of interest rate thing. And I understand that that's counterintuitive, but the difference is this US dollar is a reserve currency. So there's slightly different rules for that. They don't cover that in textbooks because the textbooks are written by Americans, understand everything outside of America. So it tends to not be taught properly. So anyways, going back to this, if the opposite was true here, if things were good, okay? If things were good, if it was risk on, and when you invested money, you were making 10 and 20% return per year because you were buying the stock market and the stock market was going up, or you're buying real estate and the real estate market's going up, and you're buying commodities. Like one of my favorites is French wine futures. Yeah, you can buy Bordeaux futures. And your Bordeaux futures are going up, and your wine collection's going up, and your art collection's going up, and your old Ferrari, believe it or not, is actually going up in value, not falling in value. And your Countach, you're like, that Countach, that thing, a piece of junk. Yeah, but it's doubled in value. Like, really? Everything you own keeps going up. So you don't want to be in cash anymore, right? Actually, you get a piece of paper. If you buy futures, you have a futures contract. Yeah. But it basically, like in 2018, I think you're buying 2019 vintage wine. So it hasn't been grown yet. Well, the grapes haven't even formed on the vine. Okay. But you're buying that vintage. So they got to grow the grape, pick the grape, crush the grape into the wine, and then you got to put the wine in barrels, and then you got to blend it, and then you got to bottle it, and then you got to age it some more. So maybe like 2021, you get your 2019 vintage wine that you bought in 2018, and then you store that in your cellar for 10 years, right? So now in 2031, you have wine you can drink. But it's cheaper to buy it in 2018 than wait till 2021 or beyond, right? So anyways, so you understand that, guys? When your investments are going up in value, going up in value, because everything is booming around the world, then you don't want to be in cash, because your cash is earning hardly anything. If you just put your cash to work, you're making significant returns. So your cash now is out of your bank and into the global market, which means the value of your currency falls because the world is for currency, because nobody has currency in the bank. If it's not in the bank, it's in the market. Okay? Therefore, US dollar would be weak if everything is going good. But in the opposite scenario, when everything's bad, you take your money out of the market and you stuff it back into your bank, right? And the value, the currency is no longer available in the market, and therefore anyone that needs that currency is going to have to pay more to it. Okay. Joe says pivots seem to be setting up for next week. That's what you're supposed to do on Friday, by the way. That is what you are supposed to be setting up next week. So if that's the case, start preparing, right? But Joe, I'm not going to throw that into the Gen Pop. So I don't know. I hope that conversation was helpful. It's very counterintuitive. Look at this. Isn't that amazing? So I'm going to put this here. We're basically at this price now, which is 12.15, and we were at this price July. Isn't that amazing? July 18th, almost a month now. Gold has been basically this, just about 1,200. Didn't even move on this news, huh? Or maybe it'll break out this time. Weekly swing traders had this plan on Monday. Simply didn't work out. Bears had basically this on Monday. They would have preferred this, but never. Well, I guess last Friday they would have taken that shot. Mad about you, lost in your eyes, lost in your eyes. Mad about you, mad about you, you and I. Went shopping last weekend, and I shop so little that I'm always amazed at the whole process. I'm like, why do people torture you with bad music while you shop? Why does that happen? See you, Jeremy. Guess we should do oil. That was if you were a bull scenario. I think everybody knows, right, that back in June, early June, before I went to Harvard, we had it going up, making a higher high. And then what? It's supposed to come down. Actually, that's what this gray area here is, to a neckline. You just happen to notice just below that is the actual target now for the monthly pivots. But those monthly pivots didn't exist back here. So we had it coming up and then working its way down. So it'll be very interesting to see what happens. Now, we're at a place where it could rally. This is a good place for it to rally, upper neckline. But if you're a bull on oil, any of this is good. Okay. So I would have two trade plans if I was you. Actually, it was a different place. It was a different furniture store. I bought a rug. And then I bought some artwork, and I really like the artwork. It was beautiful. It's, I forget the dimensions. Oh, it's probably 4 feet wide by 2.5 feet tall, 3 feet tall. And it's beautiful, modern abstract type painting of a woman reading a book. I just love it. It reminds me a little bit of Matisse. But it's actually a contemporary. I think it's a beautiful piece. I have a picture of it actually. I haven't seen it. La 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 la. I think. What? The phone just shut up. Anyway, do it that way. because it's clearly, a woman reading a book, but then when you look closely, it's sort of hard to see. Yeah. So when you look closely, it's just gobbledygook. I mean, you could even see the canvas. I could see the canvas right through her neck. So I'm just fascinated, right? It's cool, right? Yeah. Yeah, I think it's really cool. All right. Yeah, Guy, that is a challenge, and that's part of discipline, but it also has to do with seasonality. So, for example, I'm preparing to be a bear on Japanese yen. Okay. I'm expecting a turn from Japanese yen strength to Japanese yen weakness. So yesterday was a bummer. They were kind of setting up, but I don't have a lot of faith in the setups this time of year. A lot of them end up being fool's gold, but I know that. Now you take a shot anyways, but then you manage your risk differently, knowing that they're probably lying to you. It's sort of like talking to somebody you don't believe or trust. And they tell you information, you're like, yeah, but inside you're thinking, this guy's such an idiot, right? So you're like, you take everything with a grain of salt. It's the same, right? Okay, great. But then, let's say in September, October, and November, I get my weakness, great. But what am I planning on in January, February, March, April, and May? Well, the exact opposite. So it would be very difficult in that situation, if you didn't know about seasonality, to be a bear all the way through September, October, and then keep being a bear during January, February, March. So you're either very patient or you need some sort of system on a higher time frame, technically, to tell you the fundamentals have changed. Now, I teach you the fundamentals, and I cover the fundamentals virtually every day. So I hope that I'm preparing you for such situations. But even then, you could be wrong for 3 or 4 weeks in a row, right? Cool. But why don't you also then go back in time on a daily chart, right? And say, how can I combine? Let's just pick. I guess we'll do gold. Let me clear this up. You can say to yourself, what can I do? So let's say you're a bull here on gold. What could you do on a monthly basis using monthly pivots, using daily charts to confirm or deny your trades? Right? What do I do to identify speed and direction of a market? Yeah, well, Ross, you're not wrong, but I'm trying to get something that is not subjective. What can you use that will technically tell you a definitive answer, bull versus bear? 2155 cross. Thank you, John. I appreciate that. Thank you. Go back to the basics, guys. Okay, this cross tells me technically, well, on any time frame, Martin, whatever you're setting up. So obviously you wouldn't be doing this for a scalp. Okay. Yes, it's true. Joe brings up a good point. Even if you're wrong, you can still make money. You just won't make a lot of money. Okay. So you need to be very, 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 and allow this to really to move, right? I mean, that is the best case scenario you could hope for on the short term. And this would probably do. So it might be October before this goes bullish on this time frame, right? So you can use that or something like that. Maybe use the 4 hour instead of the daily. And use that as your logical, intelligent reason, not your emotional reason. Because remember, you have this fear of missing out if you're bullish in a bearish market. You start throwing down bad trades, right? You start buying everything, right? So in that case, you create a rule for yourself, and your rule would be you can't even create a bullish trade plan until the 21 is clearly above the 55 on the 4 hour. And then once you have that clearly above, then you still have to support with proper price action, right? Like at support. Is this a good place to buy based on price action at support? No. Now is it a good place to buy? Yes. Now is it a good place to buy? Yes. So you combine it, and I think Guy asked the question, right? How do you stay patient? Well, patience sometimes is an emotional word. So let's not be emotional about it. Write this down. And by the way, you might disagree with this slightly. I'm not saying this is the only way. I'm saying you need to go back in your history, look at it, think about it, smoke a cigar about it, drink a bottle of wine about it, pray to God about it, and ponder and come up with your own rules of engagement. In particular, things that make sense to you, things that you like, things that appeal to you, things that you happen to be good at. But think about it. What are your rules of engagement for when your bias and the market are misaligned? How do you behave in this situation? Shouldn't that be written down? Shouldn't your business planning retreat? How do you define you being wrong? And how do you define you being right again? Because now it becomes intellectual, not emotional. Now you're not being patient, like, I'm still waiting for this to go up. No. You just look at you're doing things like, oh, well, I still can't do it. It's not that big of a deal. But once you get the cross and the higher high and the higher low, then you start taking the shot. Engagement. And by the way, you can explain this to somebody. And if they don't know technical analysis, just say, well, I have a fundamental bias based on macroeconomics and central banking policy of all the major economies around the world, and including some outside the G10. Cool. I use that information to create my bias. Basically, whether I'm a buyer of currency or a seller of a currency. Okay? So to me, that's based on economic data and economic activity now and the expected activity in the near future. Great. But then I use price and time data on charts to look for patterns that can confirm or deny my long-term bias, whether I'm buying at a good price or selling at a good price. So when they're disaligned, when I'm a bull but the market is currently bearish, I use technical analysis to diminish our risk. Even if I'm a buyer and I get a good price, I might not buy because there's still risk associated with it. So I will wait until I can confirm the market is also starting to buy. And that's my clue. And you explain that to somebody and they're like, that is the dumbest thing I've ever heard. Don't say that. They're like, wow, you're a genius. You're like, I know, right? And yet you're like, well, actually, it just makes sense. You're a bull, so don't you have to wait for the market to turn bullish too? And then when that happens, you're a killer, you're a wolf. So that's how I would deal with it. I would think about it, I would ponder it, then I would write it down. I was reading about a hedge fund. I think it's Bridgewater. You guys know Bridgewater? Imagine you start working for this hedge fund. The owner used to behave or does behave this way. He thinks about things a lot like I do, cause and effect, cause and effect. Okay. So he writes these rules down. So when you join the firm, they give you his book of rules, and it's like 2,000 rules. You have to know the rules, because I guess I don't know. He probably doesn't know. He's probably really smart and thinks everyone else is dumb or something, but it works for them. So they're like, welcome to the firm. Here's the 2,000 rules you have to follow. Yeah. But the point is, this guy is seriously successful. I forget the guy's name now, Bridgewater. But anyways, he thinks about it, and I think that's all that matters. And maybe one day when you have 1,000 employees working at your hedge fund, you'll say, "Yeah, here's my rules. You need to follow them." Yeah, I was up quite early today too, but I'm on a fairly new insulin. And yesterday I had a little bit of a low. So I ate breakfast, then all of a sudden my hands are shaking like, dude, am I low? I just ate breakfast. So I had to like double up and eat 2 breakfasts, and then I felt fine. And then today I'm sitting there waiting to eat breakfast. I was totally fine. I'm brittle, so what that means as a diabetic is now I'm fine. 10 seconds later, I have to eat. So I tell people I hang out with, friends at school or business colleagues and stuff, I'll tell them, I'm like, look, if I tell you I need to eat right now or I'm going to die. Fall onto the ground, unconscious, and you'll need to call an ambulance and tell them I'm diabetic, and the ambulance is going to race you and they're going to take me off to the hospital. And you'll say, oh my God. 5 minutes before that, Wayne said he was hungry. I guess I should have paid attention, right? So anyways, I'm one of those guys. So this morning, I'm totally fine. I'm talking with the kids. I got blackberries, frozen, right? Frozen blackberries, blueberries, and raspberries in the microwave, 2 minutes, 15 seconds. And I'm standing there, and then all of a sudden I'm like, oh my God, I'm having a low. I was fine 5 seconds later, earlier. All of a sudden I'm like, oh my God, I'm having a low. By the time the blueberries were done, I'm like, effed up. I'm like, I need to eat this. I can barely get the cottage cheese onto the berries. And then I was having a conversation with the wife and kids. Bear in mind, it's only been 90 seconds. Now I'm eating it, right? And I'm in the middle of the conversation with these guys. All of a sudden, like, I don't even have the mental capacity to carry on the conversation. Don't talk to me. And I'm just eating it. So anyways, it's just kind of funny. But I was up early because that's a great time to do your thinking and planning and all that kind of stuff, right? So yeah, and right, Ray Dalio is the right guy. I want to cover one last thing. It's new, Ted. It's new, and one of the things you have to do with insulin as a diabetic is it's sort of like dating. You gotta like push your boundaries from now and then and find out place in the relationship. So in this case, you know, if you normally do 30 and you find yourself a little higher than you want, then you go to 35 and then all of a sudden you're having a low and you're like, all right, so somewhere between 30 and 35, but also your body can do things differently. So I'll be honest with you, last night I drank a full bottle of red wine in 90 minutes. All right, it's a little excessive on the drinking and I drank it a little fast. But you know what? I don't get hit by alcohol that much, but you know, anyways, because I'm filling the new wine cellar and I'm testing different bottles I want to collect. So anyways, I'm like, boom, tested that bottle. The thing is, red wine interacts in my body chemistry in such a way as it does lower my sugar levels. It lowers my sugar levels. So if I'm high, so I remember one time, because this can happen while I'm traveling, I was in Tokyo, and I was having a sugar high. I can feel it, right? I'm like, ugh, I can feel it in my tongue. Like right now, my sugar is really high because I had to counteract the low. So anyways, I can taste it in my chemistry. So I'm like, ooh, I'm high. So I go back to the hotel. I check my sugar level. I'm like, oh, frick-a-zee, right? So I go down to the bar and I'm like, kid you not, I'm in Tokyo at like a Radisson for crying out loud. I'm drinking fabulous red wine. They actually had really good wine. Listening to some hillbilly play guitar live, and I mean hillbilly, overalls, beard, not Japanese. And I'm like, am I one of these traveling businessmen that finds himself stuck in a lonely bar at a frickin' Radisson in Tokyo listening to this idiot? This is why people jump out of windows, right? And like, oh my God, this is horrible. I have to listen to this guy in Tokyo? Japan's awesome. That hillbilly, he ain't awesome. And why am I in a Radisson? You know what? I remember why. I was at the airport and I could see the airplane through the glass. And they're like, you can't get on the plane. I'm like, no. That's it right there. That's my flight right there. That's it right there. Like, yeah, should have been here 5 minutes ago. I'm like, no. Just open the door. No. I can get on the plane. The plane backs out and leaves. So that's how I ended up at Radisson. But anyways, yeah. Thank you for that, Johnny. No, it's new insulin, dude. My pancreas is fine. I just don't efficiently absorb sugar through my cell walls. So anyways, I want to get back to my point. I don't know how you guys got me to babble on about that, but babble. I want to open a new browser session. Let's do it this way. rba.gov.au. Boom! Shalakalaka. Let me teach you how to be a currency trader, guys. So you go to the RBA and you say, oh, statement on monetary policy, August 10th. What day is it today? Oh, crapola! Today is the 10th, and the Reserve Bank of Australia issued a statement on monetary policy? Maybe I should click that one, huh? And they will tell me their overview of the international environment and give an economic outlook after they discuss inflation? Yeah, maybe I should read that. So I click that little button, and there it is. They even put a cover page on it. Must be important. So it starts like this. You're like, Wayne, this stuff's boring. Oh, let's see. They hired a bunch of PhDs and quantitative analysts to work for you, and you don't even have to pay them. The Australian economy remains on track to achieve lower unemployment and higher inflation over time. Supported by accommodative policy and a positive international outlook, GDP growth is expected to be a little above 3% in both 2018 and 2019 fair capacity. Unemployment rate is blah, 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 blah. The global economic outlook remains positive despite recent increase in trade tensions. Output growth has been quite strong in a number of key trading partners in June. Global growth is expected to slow a little, but remain above trend over coming years. At present, central banks and major advanced economies, blah, blah, this is the stuff. This is the stuff. This is great. How do they end it? The Reserve Board has for some time been in the view that holding the cash rate steady at 1.5% would support the gradual progress being made in unemployment inflation with steady monetary policy and confidence. Higher interest rates are likely to be appropriate at some point if the economy continues to evolve as expected. Given the gradual nature of, however, the board does not see a strong case to adjust the cash rate in the near term. Holy crap, they're telling you what they're going to do in English. And people debate like the value of the Aussie dollar. And yet all you have to do is spend 60 seconds? 60 seconds. And you're a fundamental expert. And, you know, by the way, these central banks, they primarily talk about their economy, but as you see, if you read this stuff, they talk about all the other major economies. And all of a sudden you're like, you can be way smarter than most currency traders by doing 1 minute worth of work. And if 1 minute worth of effort makes you significantly smarter than most people in the market, then most people are incredibly stupid. But they do want to get rich quick, but they don't have the minute. They're too busy. You know, you notice how poor people drive really fast on the freeway? And I always wondered to myself, what important matter are they going to? And why are they late? And why do they have 3 different paint colors? And why do they have tinted windows? And why is the tint peeling off? All these things cross my mind when I'm driving, because I don't get out much, as you can see. I don't do much. I don't have a lot of friends. I just sit here. But when I'm out in the world, I'm like, this is what people do? It's horrible. So you should be, okay? Hassan, why don't you just Google why it pivots? But anyways, yes, thank you, RBA. So once again, I think earlier in this week and earlier last week, I said, why don't you go to the Bank of Japan? Why don't you go to the Bank of Canada? Why don't you go to the bank, the RBA? The bank, Central Bank of Australia, Reserve Bank of Australia. Why don't you go to some of the Fed websites, like the St. Louis Fed is an amazing website, right? You guys remember me discussing this? I'm like, download anything. I don't even care. But it's going to help. There you go. There you go, son. It's amazing how actually little effort it is, isn't it? I don't know why you guys fight me, though. It's a strange thing, right? Because I think most of you people, right? You know, but I think most people, they agree. They're like, yeah, okay, that's really good. Yes, I should do that. I can, right? That's it. Often there are lots of people, not everybody, of course, but lots of people that are like, yes, he is so right. He is absolutely right. And if I do that, I have a serious chance of becoming very successful, achieving all my dreams, and changing my life and the life of people around me. Yes, I can totally see that. I got to go now because I ain't going to do it, right? And then like, whoa, whoa. It's, right? Yeah, me too. I had to take a break there. Yeah, it's amazing though, right? Like, do you ever ask yourself, like, what? But anyways, I hope you succeed. I really do. That's cool, Ted. That's really cool. Because I know 5 out of 100 people will probably do it, right? Then I'd probably say another 10 out of 100 want to do it, think about doing it, they almost do it. And I have a chance at empowering that other 10%. But the other, where are we at now? 85% just won't do it. I don't know why. Oh, yeah. If you are not at your charts at the right time for day trading, then you can't day trade. Right on, Guy. That's cool. Yeah. Yeah. I've mentored quite a few people over the years, and it's a pretty common mistake where I say, okay, show me your trades. And they show me their trades. I'm like, this is nothing like what I teach. Like, what are you doing? And then they're like, oh, well, I can only trade in the Asian session because I have a job and stuff. So I can only trade at 9 p.m. at night. And I'm like, so you're applying a good strategy at the wrong time. I'm like, what? You can't trade like that at that time of day. And they're like, oh, so why don't you just wake up at 2 o'clock in the morning and make that same trade? Well, I can't wake up at 2 o'clock in the morning. Well, then why don't you trade at 7 o'clock in the morning? Well, I'm busy with kids and I got to get ready to work and I got a bunch of emails to check. I'm like, then stop day trading because you don't have the time. You're not at the right place. You're trying to fit a square peg and there isn't even a hole. You're trying to drill a round hole with a square peg, which I suppose you could actually do. But anyways, yeah. So I don't think you're going to have the Day trading, it's like a career. You need to it's like going to a factory. You punch in, you make your pips, you punch out, you leave. So if you can't do that consistent every day, right? It's the consistency that's important. It's like call to prayer, right? You can't just kind of choose like, I'll go to this one, I'll skip the next one, but I'll make up for it. I'll make up for that one. No, it's all about the discipline, the regiment every time, and you got to do it the right way, right? That's how you do it. You got to be at the right place at the right time and have the correct behavior, body, mind, and soul. And if you do all of that, you probably will get to heaven. I'm not sure. You keep standard trading hours. Yeah, yeah. There's been some compliance issues, so we're working on a way to make everybody happy. Okay. All right. So have a wonderful weekend. Yeah, if you don't have a lot of time, swing trading is best. If you want to have, let's say, 4 hours a day, every single day, where you trade every single minute for the 4 days, and that's better. Yeah, yeah. But just remember, trade now. I mean, you basically are trading for 4 hours, and then you leave with your money, right? You make your trades for the day, and then on top of that, I would swing trade. Yeah, that's what you need. That's what you need, John. Yes, I can do that. Yes, I can do that. Not today, Ross, but how about Monday? Cool. Thank you, Ted. Thank you, Manny. Have a wonderful weekend, everybody. Thank you for your patience with me. I feel a lot better. I feel I need to drink 7 gallons of water, probably drink another bottle of red wine to get my sugar back down. I know life's tough, right? It's a hard decision. Like, what bottle are you? If I buy a case of wine and stuff it in the wine cellar for 10 years, it's a 10-year commitment, right? Yeah, yeah, yeah. I definitely agree with that, Ross. Right? So, all right, so peace on earth. May the pips be with you. May your profits be above average. Thank you very much for being a client to TradersWay. We appreciate you. And if you haven't signed up yet, please do visit TradersWay.com. 30 seconds later, you'll have a demo account downloading MT4, messing around the back office. Yeah, so I think I'm going to go outside and smoke a cigar and drink water. Au revoir.